There's a lot of reasons why right now investing is not just clear cut. There's definitely merit to the idea of possibly not investing and just watching what the market does for a little while. Market's been very volatile. We have inflation that keeps going up, or right now it's kind of coming down, but then market rates are going up. The debt ceiling just keeps getting lifted, and the possibility that we haven't felt the real effects from the COVID downturn is still very much a true thing. At this point, people don't really know what to do with their money, so some people are resorting to buying the sand that Tom Brady retired on as their solution for this huge mess. In this video, I'm going to give you my quick thoughts on what we should do, and especially how I'm going to be investing and what I'm looking at in 2023. So this video is going to be one for my office hours segment, where I answer a question with my opinions in a pretty quick format, without many edits or craziness in this video, just to give you my quick thoughts and let you get on with your day. So if you're watching this, you're probably one of two different type of people. First would be, should I even invest? Because the market is just kind of crazy. It's going up and down. I don't know what to do. And the second type of person, you might be just saying, well, I know that I should invest and the market's down overall, but I believe that it's going to dip even further. So maybe I should just hold off and wait till it dips to a certain level. So first, for you that are asking about, should you even invest? I understand that especially if you're new to investing, or if you're new to investing heavily, that right now is a little bit scary. When things are good, when the market keeps going up, it's very, very easy to put money in because each week or each month, you see that gratification of, okay, I put in $10 and now I have $11. Whereas now you kind of put a little bit of money in and you have less. You might put in $10 and a week or two later you have $9 in there. And so you're thinking to yourself, if I keep putting money in and keep losing, this isn't a good look. Now I know you've heard it before, but I'm gonna say it again. The time that people get rich is during this time, because you're putting money in at a lower price. Remember that at the end of the day, we're buying assets. And so if that asset eventually becomes worth much more than it is today, it's much better that you bought it at a price that's much less. But most of you understand that just buying something cheaper, especially if it's gonna go up in value, is a very smart move. And if that was the only case, then I'm sure we wouldn't be having this conversation. The other part of should I invest is because there's a bunch of craziness going on, especially the stuff with the Fed rates increasing, with inflation kind of going crazy still, gas prices, egg prices, and during COVID, we just built a bunch of money out of nowhere. And so what does that mean for all of this stuff? If the dollar keeps losing value, like why am I investing in the first place? And what would be the best thing to do at this point? I'll tell you without a doubt, the best thing that you could be doing right now is 100% educating yourself. That's how you could be using your time best. Because the more that you educate yourself on this subject, on just how money works and how inflation works and supply and demand and market cycles, the more you're going to be even keeled in your decision making when it gets weird, like right now. So right now is a good time for you to pause, take a breath, and definitely go and research. Using my channel as a starting point is what I hope to even make this whole channel for. So you can learn to see some of the things that I talk about, and more importantly, the things that I show you as far as why I pick this ETF or why I pick this stock. Go ahead and look at those things and dive a little bit deeper, and that's gonna help you out so much. Now, a really good way for you to invest in yourself and in research is to get into a group of some sort of people who are thinking the same way, wanting to know the same answers, but very serious about their financial future. In my Patreon group, we have over 50 people that have a very solid group chat, and we meet on Zoom live every 2 weeks, and we talk about all the questions and things going through everybody's minds. Last week we were talking, and a bunch of the people in the group actually brought forth so much information. It was even more than what I had to say. People have made money through this group. It's been very, very awesome. It's only $20 a month. It's one of the cheaper mastermind groups that I've seen, definitely. So you can find that link down in the description below, and that would be a great way for you to spend $20 and hopefully make a whole bunch more long-term based off of the information in this group. Now, real quick, as far as this whole thing about should you invest and the debt ceiling and will money be worth whatever it's worth later on, the answer historically is that money's value just does drop. Something that costed $10 20 years ago now probably costs $20. And that's just the way that it goes. So what you definitely don't want to do is just be saving money and putting it into a savings account where it's not being able to grow at all. Because if you have $100,000 in your savings account today, that's great. But in 5 years, $100,000 might be worth $70,000 and even less as you go. So what you want to be doing is buying assets that appreciate with time. So that would be things like stocks and real estate. Because while we don't know how much the dollar is going to deplete over the next 10 or 20 years, what we do know is that if you buy assets that continue to rise in value, then no matter what the dollar amount is at that point, that asset is going to be worth a certain amount that's worth much more than it is today. And so even if the dollar is much less in value, then great. It won't be worth $1 or $2, it'll be worth $5 or $6. And you can then sell that asset for that amount of dollars at that point, and that's how you're gonna preserve wealth. The wealthiest people you know don't have a whole bunch of money just sitting in their savings account. They have a lot of their net worth tied up in real estate and in stocks and very, very solid ETFs like I talk about on this channel. Now, the other type of person is that person that understands all of those things that I just talked about. But you might be just overthinking this whole situation and just thinking, okay, in the past, I've seen that we've had dips and then we have further dips. And so you really want to take part in that further dip. Yes, 100%. I agree with that. You definitely, if you can, know when the final dip is. That's going to be your best bet. Problem is, literally nobody knows when that dip is going to be. And so if you're waiting, you're sitting on the sidelines just waiting for that and you're holding that money off, your money is losing value through inflation, and there is a very big possibility that we have hit that dip, and all we're doing now is climbing back up. And as soon as you say, okay, fine, I'm going to put my money in, now you will have lost all of this dip area. So for me, the way that I'm investing and the way that I've seen the wealthiest people invest is just to continue dollar cost averaging every single month, the same amount that you normally would. Then the way that my brain works, if something were to happen where we drop substantially, the whole market drops 20 or 30%, I'm gonna do everything I can to get a whole bunch of money and throw a lump sum in at that point. Now, I'm not just sitting and keeping this money in my savings right now and waiting for that to happen, but what I would do is possibly deplete a portion of my emergency savings, which I know is controversial. Please don't roast me in the comment section. This is the way I would do it. I'm also younger and can take risk. I would be working double time on side hustles. I would be doing everything I could knowing that that period of time is not gonna last forever, and this is the time to get as much extra money in there as possible. So that's the way that I would do it. It also keeps me sane knowing that right now I don't have to pick the right time. I'm just gonna dollar cost average every single month, and if it rises, great. I bought in a bunch of times when it was lower. And if it drops a whole bunch, I have a plan, and I'm still buying in, and there's still money being tied up into assets that eventually 10, 20 years down the road are gonna be worth way, way more. So either way, I'm set. The other thing that you definitely need to be doing at this point is getting rid of all debt, because we are in a time of uncertainty and a lot of people are getting laid off in their jobs, and these job layoffs always start with tech companies. But that's not where it ends. It continues to cycle through all the different sectors. So just because it's a bunch of tech companies that are laying off now doesn't mean that down the road other companies won't be laying off. So make sure you have a big emergency fund, make sure that you have very little or to no debt, and then make sure that if you are investing, you're not investing with money that you're gonna need in the near future. So these are my thoughts, and this is how I'm investing and what I'm thinking about in 2023 to set me up for 2025 and 2030. I'd love to hear your thoughts and any questions that you have that I can make for next week's office hours. Have a good day.